Welcome to Friday Takeaway. This week, we are looking at two semiconductor makers, Unisem and Inari Amertron. But before we get into that, the European Central Bank has kept its rates unchanged as expected, with President Mario Draghi confident that the regional economy would remain robust. ECB is planning to end bond purchases by the end of the year and keep rates low for another 6 months at least. But he warns that global risk factors have become more of a threat in recent months, such as unchecked protectionism and vulnerable emerging markets. At its latest keynote, Apple has launched not one, but 3 upgrades to its high-end iPhone X range, the most top-end being the iPhone XS Max, which all tricked out could cost $1,499. But analysts say that the big seller will be its entry-level iPhone XR that retails for just $749. And analysts say that 100 million units of the iPhone XR could be sold in the next 12 months. Lots of local political news this week, starting with Dato Sri Anwar Ibrahim's bid to get back in the game. He will contest in a by-election at Portixon after the seat was vacated, which caused quite a bit of controversy. However, he's still seen as the heir apparent to Tun M, as this is his first step. As for 1MDB developments, firstly, the Deputy IGP announced that 2.97 billion ringgit of 1MDB monies made its way into ex-PM Dato Sri Najib Razak's personal accounts through 3 companies with links to 1MDB. This, in the same week, his lawyer Tun Muhammad Shafi Abdullah was hit with money laundering charges, where he pleaded not guilty. And on a side note, it was reported that fugitive Loh Teck Chyo had allegedly used 1MDB money to buy Kim Kardashian and her ex-husband a Ferrari, which she may have to give up. In this week's This or That, we take a look at the semiconductor industry, which is always tricky given how cyclical it is. Even the most seasoned investors find it hard to find bottom or top. But this week, the interest in players Unisem and Inari Amertron is primarily news-driven. Unisem received a preconditional voluntary takeover offer, while Inari's most recent earnings deserve some dissection. So, let's take a closer look. Founded in 1989, Unisem makes semiconductor devices and provides solutions in wafer grinding, packaging and testing of integrated circuits. Its factories are in Malaysia, China and Indonesia. So, MD John Chia together with his Chinese partner Tianshui Huatian Technology Co. made a preconditional takeover offer of 3 ringgit 30 cents per share. And it should be pointed out that they are going to maintain the listing status, but TSHT will be the largest shareholder. The offer price was at a premium of 11.11% to the stock's pre-suspension price of 2 ringgit 97 cents. The good news is that the management team is going to remain the same, and people like continuity. Analysts also see this as a positive move, as they see the partnership as synergistic. Should the offer go through, Unisem could leverage on TSHT's significant presence in China and expand its Chengdu operations more rapidly. Numbers aren't great. Unisem has seen 3 consecutive quarters of profit decline due to lower profit margins from change in product mix and weaker ringgit. As such, its shares has dipped 18% year-to-date on what analysts said is Unisem's unfavorable product mix. ALLIANCEDBS research warns that a major slowdown in smartphone sales might hurt the semiconductor industry, including Unisem. Judging by the analysts' comments, a few are saying to accept. Hong Leong Investment call it a generous offer, and it gives investors an opportunity to exit the company to other listed semiconductor companies, which offer better earnings quality. CIMB Research maintained its ad rating but with a higher target price of 3 ringgit 50 cents. Historically though, over the past year, the stock has dropped 57.6% to what was a 2-year low of 1 ringgit 69 cents in May this year. But it did see some recovery even before the offer was made. Inari Berhad was listed in 2011, but in 2013 it acquired Amertron Inc., hence the change of its name. It is involved in electronic manufacturing services in the semiconductor industry for radio frequency, optoelectronics and fiber optics technologies. Its factories are across Malaysia, China and the Philippines. So the company's earnings for the 4th quarter dropped 13% from non-cash items, namely higher profit allocation to non-controlling interests. It had also reduced 4th quarter 1/8 dividend to 2 cents from 2.8 cents last year, despite its cash balances actually expanding 16.3% to 530 million ringgit in FY18. Based on this, MIDF thinks that Inari is capping the dividend payout at below 4% for more cash to fund its future capex needs, which is not a bad thing. Businesses need to grow, but inconsistent dividend payout can be a turn-off for some. Speaking of capex, one of its expansion plans is its new facility in Batu Kawan, with its first phase due to be done by October this year. And its various core business segments, such as its wireless RF, optoelectronics and iris scan product, have been recording better numbers due to higher demand. A good product mix also means better margins. In fact, M Invest expects Inari to register a strong CAGR growth of 31%, which will be supported by 3 pillars. Radio frequency is one, which benefits the 5G transition. Secondly is laser devices, supported by increasing biometric and augmented reality applications. And lastly, LED, on the back of rising demand of high-resolution billboards. Although it has its expansion plans laid out, analysts seem decidedly mixed with 7 buys, 6 holds and 1 underweight. Target price ranges between RM1.85 and RM2.90. MIDF research also thinks that the stock valuation of more than 22 times is currently stretched. It has a neutral call with a higher target price of RM2.25. If you look over the year, the share price has recovered from a one-year low of RM1.59 in April, but it still wasn't as high as it was in January, which was RM2.29, but honestly, not that far off.